What made it shift for you to go from more like systems to psychology? Was it like a shift, or was it just kind of a natural transition over time?
Well, I think it's a natural transition. I think, like I say, you can tell where someone's at by what they're interested in, the questions they ask. You can tell where they're at, because what happens is you get to a certain point where you're trading your system and you know your system is probably going to work in the future,
Mhm.
and then it becomes this how far can I push it? How far can I press my risk? What can I do with risk management? And That's where traders get into trouble. Is they misunderstand risk, and they believe that to make more money they can simply add more risk per position. What this does is it makes it more likely that they're going to hit their catastrophic drawdown level. Now, I don't know what your catastrophic drawdown level is, or whoever's listening to this. I don't know what that number is. For some traders, it's 10%. For other traders, it's 30%. But at some point, you're going to decide that the system is broken or that the market has changed. And that's usually not the case for either of those. So in both cases, we're wrong, right? And what we think is, oh, the market's changed, or my system's broken. But really what's happened is you've set your trading to a risk level where it's unavoidable. You're going to hit that drawdown level that's going to make you rethink things. And sometimes that means you tweak your system, you add a filter or something crazy like that. Or other times you just quit trading the system altogether, or quit trading altogether. And it really has nothing to do with the system or the market. It's just that you've decided to put that risk at a level where you're definitely going to hit that uncle point, that point where you just say, I can't take it anymore. And I feel like, once traders get a grasp of this concept of what's the risk of my drawdown, of my max drawdown, they can do a lot better. And the other thing they have to get a handle on is, how do I figure out a way to make sure that I execute my strategy over and over again the right way? And that really comes down to psychology and focusing on not the results of your trades, but the process of taking your trades. That's really where the secret is. It's not thinking about what happened last time and why I should change my next trade. It really comes down to what can I do so that I get to a point where all I'm focused on is executing the trade the right way. And what that means is you're going to be really happy when you have trades that are losers. And I know it sounds weird, but because you've done it the right way, you've executed your system the right way, you should be rewarding yourself, even though you had a loser. And it's counterintuitive because we're always looking to fix things and reasons why we had 4 losers in a row and things like that. But that's not really the way that, in my estimation and in my experience, the best traders look at it. They look at process, they look at execution, and they don't focus on results.
Yeah. And this is probably the biggest shift I've made myself in my trading, to shift from the outcome to being addicted to the process. And that makes a big difference.
Yeah, absolutely. And you use the right term too when you say addicted, because you can be addicted to that dopamine hit that you get when you reward yourself, right? I mean, we know this, like in those fitness, like Apple Watch, or those Fitbit things, and like what is that? That's the gamification of exercise, right? So when I don't wear it anymore, but when I had one of those things, I used to always be looking at how many steps I take today. And I would, I don't like to drive anyway, so I'd walk everywhere, right? And I say, oh yeah, I hit my 20,000 steps or whatever, and it was like, I didn't even really care about the fact that I was walking a lot. All I really cared about was hitting my, getting that win and hitting those levels. And that's the same thing you can do with your trading, because that dopamine hit you get comes from executing, not from winning. And that's, once you do that, as you say, makes a big difference, doesn't it?
How do you transfer that to trading? Do you look at a compliance percentage level that you have to reach, or how do you transfer the Fitbit aspect to trading?
Well, what I do, and what I recommend that people do, is all you really have to do is keep like a journal. And what you do is you give yourself a score on your entry of your trade. So you don't know, there's no hindsight bias here, because you don't know what's going to happen in the end, right? And obviously my trades usually take some time. So this is quite easy to do for a trader who trades 4-hour or daily charts or weekly charts. So you give yourself a score, okay, on the entry, and then you give yourself a score when the trade's over on the exit. And then what you do is you add those scores together, And if it hits a certain level, you get a point for that, or 2 points, or whatever. You know, you make a game out of it. And then when you get enough points, you reward yourself. You go to the movies, you go on a holiday. You know, you could just go on a weekend holiday with your girlfriend or your wife, or whatever, your husband, whatever. And then when you get enough points, you can buy yourself something really nice. Like I like to get myself really expensive surfboards. You know, these are the sorts of things that you do. You're making a game out of it. Really, that's what it comes down to, is like, how can I create a system so that I get rewarded with a dopamine hit when I do the right thing, win or lose, and then I keep striving to do that. And that's the best thing I've come up with. If anyone else has a better idea, let me know. But it's basically like the Fitbit watch for traders. You just keep track of how you're doing, not of your wins and losses, of your execution. And then in the end, you keep rewarding yourself, and you build up to bigger and bigger rewards over time.